Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Friday, July 21st, and we are staring down at the weekend. One thing everybody should be aware of before we dig into the charts is next week we have the FOMC decision, followed by the press conference. We'll, of course, go over that, Monday and Tuesday a lot more in depth with some updated data, of course, on the charts from a couple days worth of trading. But then staring down next week, we have GDP advanced reports as well as PCE. So next week is a legitimately jam-packed week because we'll have FOMC with the presser, and then we immediately get PCE, which is a very, very important inflation metric, which could, so let's assume the Fed's hawkish on Wednesday and we have, maybe a bad Thursday, maybe GDP is good, and then we kind of pick up a little bit, and then PCE is great, and then we shoot back up. So that's definitely something that could happen next week. The inverse could occur as well. Maybe the Fed's dovish and PCE doesn't come down. So there's a lot of possibilities. Definitely important to be aware of what is on your calendar for next week if you are entering trades towards the end of July. So DXY, we talked about this, it was ranging down here. We mentioned, above 100, probably start to crank up towards 101. I personally did not expect it to crank up towards 101 so quickly. That is a sign of strength. And one thing I'll point out here, I'm not sure if this actually hits. So yeah, so this is right on the cusp of my favorite kind of RSI trend too. So if this does, get above that 101 level, then I would expect RSI to move up towards, the overbought level, which would probably imply, DXY being above, maybe at 101.5, maybe 102. It could reject off of here as well. And if it does reject, I would expect it to hold at about the 105 level, and at worst, that 101.2 level. So I'll just go ahead and draw those for you right here. So this level right here and this level right here, actually, this level right here. So, and that's because obviously, we'll consider this a range. We'll consider this, breakout with a and then a deviation that wasn't confirmed, closed above the range, and then we moved higher. So this range right here and then this range right here would be where we would expect price action to react. So we'll be looking out for that. And of course, heading into FOMC is right here on the chart where my cursor is. So just a couple of days. And of course, a hawkish FOMC certainly could shoot the dollar up. So looking at equities, very, very not pretty scenario here. I'll just kind of pull up the 4-hour. This really caught my eye this morning because this is pretty much how we opened. Of course, this next 4 hours really where the U.S. session starts. But the fact that we, tried to jump to the top of, the range and basically, try and grab this liquidity again up here was rejected really hard back underneath the weekly VWAP. And that is usually a big bearish sign for me. The inverse, it dropped underneath the VWAP and then closed above, and then it shot up here. So let's just think about, what does the inverse look like on that? If we do not get a close above the VWAP on the next 4 hour, which will happen in about 70 minutes. So it's at, the top of the next hour. I would expect us to drop back down to this 45.58 level. And then if that breaks, I'm very confident in seeing 45.30 and more so likely this 45.11 number. So something to just be very careful with equities up here. We've noticed some bearish divergence. Another of my favorite trends, we were just talking about this in the DXY. This trend lasted from the 9th all the way to the 19th. So 10 days worth of RSI bullishness. We broke that. Typically you'll move back down to oversold. So, and I'm expecting, I would think that oversold number would be probably at this 45.30, 45.11. This isn't perfect science, but, just it does look weak. And anytime it forms a lower high and confirms a lower high, that is typically when I like to step out of trades. As you can see here, it wasn't equal high. We stayed above the VWAP. We had that, VWAP deviation, and then we moved higher. Now we kind of have the inverse going on, and it definitely worries me if you are a bull. So I could be wrong. You're more than welcome to fade me, but in my personal opinion, this does not look like anything that I want to buy into right now. If it breaks above 45.90, now that is, definitely, likely to be a buy, but always important to be careful of the equal highs and potential liquidity grabs up there. Looking at Bitcoin, I'm sure you're just as bored as I've been over this past week. I mean, there's definitely been some good opportunities, but they've been few and far between. Just the way I'm looking at this chart is, you really need to get above this VWAP to do anything, in my opinion. And as you can see over the past couple of days, mainly past 24, 36 hours, we've been stuck underneath this. And the big concerning thing to me is, and I'm a market structure freak, like you got to have a good market structure for me to jump in. We got this higher high, right? And then lower high, lower high, lower high, right? Lower high, lower high, and then lower low, lower low, lower low, lower low. This is possibly a lower high. So what happens, with this trend? We form another lower high, we likely form another lower low. So, I'm not going to, I think it's quite obvious kind of what I'm pointing at. If you break beneath this 29 kind of 766 level, you're going to drop back down to this equal liquidity right here. You lose this level, you're going to drop down to 29.1. You lose that level, you're going to drop down to 28.5. And if I just kind of zoom out, I personally do really like the 28.5 level. Obviously, it is the top of where we traded back in May. I think it's a really good level, but we could also, kind of slip down in this 28 level. It's always important to be aware of. Just because that's the top wick doesn't mean that this doesn't create some sort of demand zone that we've talked about before. So, you could see prices drop all the way into this 28K flat level. Let's say it drops in here. Oh, let me get say it drops in here. What the heck? Drops in here and then trades around a little bit, does a little bit of the same what it's doing, and then shoots back up. So that's definitely something plausible. I probably won't be an immediate buyer at 28.5, but if we see a massive wick on a 28.5 tap or a 28K tap, I'm probably going to dive in, at least on a short-term scalp. So it's not guaranteed, but I mean, look at the daily too. Now, this could certainly reverse, and that's why the VWAP is so important in my trading analysis, because as you can see here on the daily, it's capped the daily 3 times in a row. And it's honestly capped the daily for most of the time, other than this, weird July 13th, 14th spike. So the longer we stay under the VWAP, the weaker things look, in my opinion. And we have the critical level down here at 29.5. If we break that, we'll probably see 28.5. And then inversely, like I said before, got to get above that VWAP to move higher. And the first place I'd target, if you could move higher, is 30.4. And if you can get above 30.4, then you'll probably move up to 31. So something to consider if you are a bull. But I will say, lower highs, lower lows. Always wait for a market structure break to enter. And a market structure break would have to be above 30.4, because then that would be a higher high in this market structure. So, and if you're confused about what I'm talking about, higher highs, higher lows, market structure, just Google basic market structure, and it's extremely easy to figure out. It takes a little bit of studying, a little bit of memorization, but once you see it on the chart, let's take the inverse. So we formed a lower low here, higher low, higher low. We finally broke the market structure on this one. So higher high, we have an equal high, but that formed a lower low or higher low. So therefore the market structure is still intact. And then we broke above the lower high and formed a higher high, right? So then after we form that higher high, what you want is this high to hold. Well, actually what you really want, like for peak bullishness, you want this high to hold. But then you want this higher low to form another higher low. So you would expect something, above this price, considering we dropped below, that market structure was broken. And now we've been forming lower lows and lower highs. And so, that's just basic market structure. So if you knew how to trade this, as soon as you see a lower low, you look for a higher low. And then if you get that lower high break, then that's automatic. I'm looking for an entry. And of course, it formed another higher low, and then it skyrocketed. So, basic market structure can save you from a lot of trades. Looking at Ethereum, it's very much of the similar, higher high, lower high, lower high, lower high. Well, I mean, actually, this last one, this was kind of a market structure break, but then we came down here, and it's not an exact lower low, but it's an equal low, and the market structure has not been broken. So, what we're looking for, on ETH is, again, with Bitcoin. So the VWAP needs to, be broken, which is around 1900. Also coincides with the resistance that I've had lined up for quite some time. And then we have support down here at 1860. So if we drop underneath this 1880 number, we'll break down to 1860. If you drop below 1860, you'll drop to 1830. And if we do not survive 1830, that's when things get very, very hairy. So 1830 is right, and for some reason, let me see if I can zoom in the 4 hour. For some reason, my trends change on different candles. I need to figure out why. But moral of the story is 1830, very critical juncture, because as you can see here, this is where we formed our another higher low from this and this, right? So we're looking for that market structure continue. So on a higher time frame market structure, it doesn't look bad, because look, you've got higher low, higher low, higher low, higher low, possible higher low. You've got higher high, higher high, higher high, higher high, right? So then your a lower time frame market structure looks bad. Higher time frame market structure looks good. If you want that market structure to stay intact, you need at least an equal low. That probably is not the saving grace, but it's certainly a positive indicator that you want. What you really want is 1860 to hold, because then that's a higher low in comparison to these little movements right here. So certainly something the bulls are looking out for is another higher low to be formed on that chart. And if it does, then, you would probably expect, a chance at a market structure break, which would send us, which you would need to get above 1945. And then to form that higher high, you need to obviously get above, this 2030 level. So something to consider. But, just based on this, this lower time frame price action, I mean, it looks so unenticing. It could certainly reverse, and we could certainly just maybe we drop to 1860, we get a strong buyback candle. At that point, I'm closing all shorts, especially if it happens on both Bitcoin and Ethereum. Like if we drop here and then we have a $20, doji, and it jumps back up to 1880, then I'm out of shorts, because, the trade, it could continue, but it's more likely to fail in that context. And therefore, I think that at that point, you might want to look for longs instead of staying with shorts. So right now, I am short Bitcoin and Ethereum. And I have a feeling that we're going to end up towards these equal lows. I really just don't like the look of equities, and the way DXY is revving is definitely striking a little bit of fear in me. But people have made really good money buying into fear. But it's just based on these candle formations, it does not inspire confidence within me. So therefore, I'm going to be bearish heading into the weekend. Remember, we have FOMC next week, which is right here, Wednesday, July 26th. And the one thing that'll keep me out of shorts is, like I said, maybe we drop down to 29.5. We have a massive, another wick that looks like this, probably going to knock me out of my shorts. If we have there's no beautiful wick, but something like this, right? So this is like this is a $20 wick right here. So of course it's still retested, where the flat lows were, but ended up moving higher. So if we drop to 1860, we get that fat wick, I'm out. Maybe I'll throw a long out there, and maybe it's successful. But right now, chart's telling me short. I'm gonna listen to the chart. The stop, the where I'm wrong for Ethereum is above 1900, and for Bitcoin is above. It's really the 30K flat number. But the VWAP is sitting at 29,979. So that's my outlook for the weekend. But I wouldn't mind being wrong, because green candles are good for everybody, but telling it like I see it. So good luck, happy trading. See everybody on Monday.